Hello and welcome to part four of how many billions are lost due to poor lubrication practices each year. So at the end of part three, I asked the question based on, we looked at trends and data for a particular example on a reducer, and I give some background and information. So I asked the question, what's the financial impact for this plant based on those observations? So I'm going to dig a little bit deeper into how we can assess that. So what I'm showing here is it's an energy and life cycle cost worksheet. So I've based this on life expectation, based on ISO counts, the cost of the reducer, energy costs, the cost of fixing the issue, which is a filtration, and I looked at return on investment. So what I also tagged onto this worksheet was a, an item on the bottom based on what the company was currently doing, which is uh, bi-weekly oil sampling and annual oil changes. So those are extreme. You don't need to be pulling samples every 2 weeks. The oil lab will be horrified to hear me say that. You don't need to be changing the oil every year. Your oil supplier will be also horrified to hear me that. And you do need to monitor, keep the oil clean and in an acceptable standard. And the person rebuilding your equipment or supplying you with parts will also be horrified to hear me say that, because there's three businesses which are making money out of this practice, and it isn't the ones who are digging the coal out the ground or the diamonds or whatever it is. It's all these people who are promoting, for want of a better word, ignorance. So this cost spreadsheet gives some dollar value based on the data you've got, the trends, and all that other good stuff. And these are underestimated. So when I talk about an estimated life at an ISO 18 of 30 years, and its estimated life at ISO 24 of 13.5 years, you get a 40% reduction in life based on that graph. Well, this company actually, instead of adding dirt to the equipment and not dealing with the contaminants, they've also got the wrong oil. So that's why they're getting 8 to 9 years out of the equipment instead of 30. So again, these numbers are conservative. So financial impact of premature failure for one reducer is around $12,000. That includes the additional work they're doing, which they don't need to do, the extra sampling, the oil changes, that all adds to cost. So for 200 reducers, which this company has, it's about 2.4 million estimate. Like I said, these are underestimated numbers a year based on the current practices. I haven't included large loose systems and hydraulic systems, they're not considered. I haven't included energy savings because it's difficult to quantify that. Could be anywhere from 1 to 3%. Production impact. I will say this: when you pull a spare out of the warehouse and install it, there's a thing called infant mortality. It may not work as intended, so then you're getting into that additional downtime because you've upset a stable system. You can't assess that, so I haven't included that. So there's also an increased cost for storing and maintaining space. Uh, Storing anything costs money. You've got to maintain it. You've got to allocate space to it. So because your equipment is failing 3 times faster than it should, you need more space. So that's also a cost. So financial impact on this business is estimated at probably larger than $10 million per annum. That's a huge cost, which is basically goes under the radar because the company isn't aware of this until now, because I've just told them. So we get into the problem with oil labs and industry standards. So when we look at this distribution analysis plot, this is what you'll find on your oil sample report. It gives you numbers which probably may not make any sense to you, but what it says is for this particular industry, they go and reduce a plant other ore. Well, it's basically a mine site. It's taken data from over 21,000 reducers, so it's basically global, probably over the whole of North America, and assessed the data. And so the typical average for this particular test is 14,530. So that's the average. So this sample is 83.5%. So it's below average. So what blows my mind is they consider an ISO count of 314,000 as reportable. So it's not even an alarm. So to put that in context, that would be an ISO count of 24, 25 before they consider it even reportable. So listen, I'm quite acceptable running my equipment with ISO counts as high as this and not doing anything about it. So for element bearings, that would be a life expectancy of less than 30%. So this is industry standard. This isn't just this one plant. This is looking at every plant who sends an oil analysis sample and looks at the data. So doesn't get alarmed, doesn't get action. It's basically carry on as normal. So this is ore handling or mine site. This is pulp and paper. Pulp and paper is actually worse than a mine site. That's got a reportable of 507,000 particles. So these industries are accepting the fact that you're only going to get 30% and less life out of the equipment and just move on with life, pull another one out the warehouse. So not acceptable. And I'll look at it's not just reducers where I see this information. This is a motor outboard. It's a bearing on a dryer exhaust fan, not a reducer. ISO counts average, if you look at it, it's 50,000 plus. So your target should be 2,500. So you're looking at levels 20 times dirtier than recommended. And when you look at the trend, obviously they don't filter it. They don't consider that excessive. They haven't done anything about it. Same with the zinc. So zinc is, if you didn't know, is a constituent of brass. So I'm assuming there's brass somewhere in the bearing, and that's basically a wear metal that's been identified in the oil sample report. Well, the problem with this is zinc shows up as an additive. In this case, it isn't. That's when you've got to look at your reference sample. So they're quite diligent at changing the oil every year, but I'm paying no attention to the levels of contaminant in the oil, which is creating the wear in the first place. So my point of this is, it isn't just reducers. It's bearings, hydraulics, large loop systems, all have the same issue. So look, what's the problem? I've talked to senior managers, CEOs, directors, and for want of a better word, all I see is abject apathy at senior manager level. They're way too important to do anything about this or take any interest in it. They have no concern or issues with maintenance running their plant in this manner, and I have no idea why. And it might be part of the next block there, ignorance. So it's ignorance at the investor level. If I was an investor in a company and I realized that they were managing an asset so poorly, I would raise an alarm. I would ask the question why. But investors are just interested in the bottom line. It's like, if I'm making my 8% a year on investment, I'm quite happy with that. I'm not going to question that the maintenance department is doing what it's doing. I'm quite happy. Do I need another 1%? Yeah, that'd be nice, but I really don't understand it, so I'm not really going to ask the question. So the other one is, I said ignorance at government level. Well, apart from the UK government asking Professor Peter Yost to do an investigation into this in 1966, I really haven't seen anything since. I think China did a study in Germany, and that was many decades ago, but nothing since. So governments don't get involved in maintenance of plants. It's not really their bailiwick, for want of a better word. So you got to think, well, why don't governments take an interest in this? Because this is all lost revenue. And if it's lost revenue, it's lost tax income, because governments like taking money off businesses and individuals. So that's all lost opportunity. Why don't governments take an interest in this? So my last block there is It's basic global athlete to fix a problem costing trillions of dollars, pounds, pesos, whatever you want to call it. It's a global issue, and for the life of me, I don't understand why. If it's something that's easily fixed at a cost which is peanuts compared to the consequences. So my question is out there is, why don't people take an interest in this? And last but not least, if you if you'd like advice on how to stop this happening and how to fix these issues, there's my contact details. Feel free to email me, preferably. I don't answer the phone if I don't know your number, or send me a text, and I'll be more than happy to help you out and basically save you a few dollars. Thanks for listening.